Welcome back. It's time now to take a look at the top business stories. Abu Dhabi's credit outlook stable according to Standard & Poor's. Meanwhile, S&P gives DP World positive outlook. And BRICS nations want more say in who will run the IMF. Let's look at the DFM and ADX stock markets. First, UAE shares retreated for a fifth day amid concerns that Europe's sovereign debt crisis could spread and slow the global economic recovery. The DFM General Index fell 1.2% to close at 1,526 points. Best performer was Al Firdous Holding with a plus of 14.6%, followed by Taka Full House, which gained 11.6%. Al Salam Bank Sudan also traded towards the upside with a plus of 1.8%. Stocks to lose were Ema Properties, which fell 1.6%. DO was down 0.9%. Emirates NBD dropped 0.3%, and Drake & Skull fell 1%. 97 million shares were traded, valued at 122 million dirhams. And over in the capital, the ADX fell 0.6% to close at 2,600 points. The energy sector was down the most, with Taka falling 4.8% and Dana Gas 1.6%. Best sector was the consumer staples sector, with Actia Group rising 4% and Foodco Holding surging 6%. So real estate also lost by 1.6%, as did First Gulf Bank, which dropped 2.6%, and National Bank of Abu Dhabi, which lost 1.3%. 73 million shares were traded, valued at 115 million dirhams. And let's now look at the GCC markets, which ended mainly lower today. And now to our top stories. Abu Dhabi's credit outlook is stable according to rating agency Standard & Poor's, which, like rival Fitch, has an AA credit rating on the emirate. In an interview with Reuters, the S&P's head of sovereign credit ratings, Moritz Krämer, said that the risks are balanced, so neither an upgrade nor a downgrade is imminent. One reason for Abu Dhabi's creditworthiness is its 10% share of the world's oil reserves, which generates stable revenues. Also, Abu Dhabi plans to centralize bond issuances by state-owned entities by creating a debt management office. That is also something S&P praised. When asked if S&P had plans for rating the whole of the UAE, Krämer said the Federation of Emirates had not yet asked for a rating. Meanwhile, Standard & Poor's revised its outlook on Dubai-based port operator DP World to positive from stable today. The rating agency also affirmed its BB long-term as well as its B short-term corporate credit rating. The outlook revision reflects the view that the port operator's financial risk profile will improve once it has completed the sale of 75% of its shares in DPW Australia, Standard & Poor's said. The company previously announced that the $1.5 billion earned from the sale will be used to repay some of its debt. That will improve the company's financial strength. On top of that, S&P said DP World's operating performance remains healthy. Abu Dhabi Gas Industries, also known as Gasco, is looking to take on over 1,800 engineers and technicians over the next 18 months, as it has several expansion plans in the pipeline. Gasco is starting several major projects, including expanding existing plants as well as the installation of new gas processing facilities at various locations, for which the company needs new staff. A dozen projects worth more than $13 billion are at various stages of execution, according to press reports. Once the projects are completed, Gasco will be one of the leading gas processing companies worldwide. The fact that the oil and gas industry is hiring again is also a positive signal for the job market, experts say. And in our fast financial news, Abu Dhabi's Arbor Investments raised $1.76 billion from the sale of bonds exchangeable into stocks of German automaker Daimler. Initially, Arbor planned to raise $1 billion, but strong investor appetite for the bond prompted it to increase the size of the deal. Etisalat announced the provision of the iPhone 4 to its Basel prepaid customers after the smartphone previously was only available for postpaid customers. Etisalat launched the sale of the iPhone 4 in September last year. And after the break, we will run you through what's making the headlines in international business today.